Hello, everyone, and welcome back to the show. I'm Blake Oliver.
And I'm David Leary.
We have been talking a lot on this show about CPA pipeline challenges. We've been talking about the 150-hour rule, that extra year of education to become a CPA. Licensure requirements, they're pretty challenging. And we've seen some discussion among state CPA society leaders, among the AICPA and NASBA, about perhaps changing those licensing requirements to make the accounting profession more accessible and more appealing to high school and college students who are thinking about a career in accounting. We've been having folks on the show to talk about these issues, most recently Jen Kreider from the Pennsylvania Institute of CPAs. And our goal is to talk to as many folks in this as possible. And so to that effort, we have invited David Knoble on the show from the South Carolina Association of CPAs. David, welcome to the show.
Thanks, Blake. I'm looking forward to being with you.
So tell us, David, about your role. What is your involvement in this whole discussion about pipeline issues?
That's a great question, Blake. So I am the chair this year for the South Carolina Association of CPAs, but I've also spent the last 4 or 5 years working in our Governmental Affairs Committee, which means I helped rewrite regulations at the early stages. We've rewritten the Accountancy Act once already and are working on that again. So I know a lot of our South Carolina legislators. I've met and spent time with NASBA, with Ken Bishop, with the AICPA, with Sue Coffey, and those fine folks that work with us on a national level. And more recently, the CPA SEA group, so that all of our states, as we begin to dissect what we're doing and what the best alternatives are for moving forward.
So let's talk about changes. I understand that South Carolina is considering some changes to the Accountancy Act there. What are you working on?
Great question again. And, we spent the last couple of years making the largest change to the Accountancy Act that had been done in 15 or 20 years. Bringing that up to date, we worked on things like accounting records and how those really work, and added nano learning to our CPE process. So a lot of current things. And as we got into our pipeline discussions, which have also been at the forefront for the last several years, and we should talk probably at some point about what we mean by pipeline. But as we got into these discussions, Blake, we realized that there were additional enhancements that could be made to the Accountancy Act to really help fill that pipeline. And that's probably something we ought to spend time on for sure.
Yeah, let's talk about the pipeline. When you think of pipeline problems, what does that mean to you?
Well, that's the most important thing, because all of what we're doing now is driven by the idea of pipeline. So pipeline's not an incredibly new concept, but it can be a little difficult till you see the numbers. We've got a large aging population around the country. This is not just South Carolina specific. And this aging population is retiring in the field of accounting. The problem is that we have a smaller number of students. Now, I'm going to say students in every profession. So there's a smaller number of folks that are used to potentially become accountants or doctors or engineers or anything else. And demand's increasing because there's more work to do. It's more complex. More governmental agencies need audits done. Tax law gets more complicated. The Health Care Act, we all of a sudden had to start reporting health insurance. Everything's getting more complex. So high demand, low supply is a problem. And instead of the cycle that we had 10 or 15 years ago, when people couldn't get jobs graduating from college because there were too many in any field, now there aren't enough in any field. So the pipeline question is, how do we get these students to decide they want to spend time studying in accounting and then spend the work necessary to become a certified public accountant? That's our pipeline problem.
And the issue that we've been discussing specifically on our show extensively in the last few months is this 150-hour rule in pretty much every state that requires accountants who want to become CPAs to get the equivalent of a 5th year of education in an accredited university or college, which adds expense, adds cost. A lot of folks have to go get a master's, but we haven't really seen evidence that it increases the quality of CPAs. In the informal surveys that I have seen done, the vast majority of folks CPAs think that we'd be better off without it or with some alternative. We saw in Minnesota, they're considering replacing or offering an alternative pathway that goes back to the 120 hours, so regular 4 years of education and 2 years of work experience. What is South Carolina doing in this regard?
You asked or mentioned several different things there, so let's hit every one of them. The first thing I'll tell you is that there are a lot of folks who really enjoyed getting a master's degree. I have a master's degree from the University of North Carolina at Chapel Hill, and if you ask me if I'd do it again, I'd say absolutely. But I'm also not first-generation college student, and we have first-generation college students that work with us, and their wherewithal to spend $30,000 a year going to a public university for 5 years is not near what it is other folks. So it's not only whether they would produce good CPAs, it's partially whether they can afford to do the work to get to that point. And if you can't afford it, what happens? So there's also single parent households that have difficulty getting through that process. There are folks that are trying to get to a second career. So when we talk about alternative pathways or different ways we can get to the CPA licensure, part of what we're trying to do is capture those folks that would otherwise not be CPAs. How do we get someone that's not a CPA but almost there across the finish line and add them to the pool? So that's one thing that we certainly address and talk about. We talk about 150 hours, and you mentioned Minnesota. I have to give a shout out, a kudos to Minnesota, because what they did was they forced us all to step back and take a look at not only our state, but look at how the other states work and really start discussion. There were plenty of folks having discussion. It wasn't all encompassing, and it certainly wasn't at the level of detail that we were all involved in. It caused me to spend a lot of time looking at other state laws and how do they work. And I got to tell you, anybody that's gotten this far into the podcast and is not sure whether they want to finish, this is a Mythbusters episode. There are a lot of myths out there with some of the terms that we have. And I got to tell you, as I look at them, you have new meaning when you really study these things. So we're going to do some myth busting today for sure.
I would love to do that with you because I've been digging into this concept of substantial equivalency, and I'm finding that it's a very complex concept and not well understood by me for sure, but I think by most people. And David, go ahead.
I was just gonna say, and before you jump in, I just want, like, these are myths that are in the Uniform Accountancy Act. Is it this?
No, that's not what I said. They're
No.
myths in terms. When you hear the term mobility, when you hear the term substantial equivalency, immediately something comes to mind. When we talk about 120 versus 150, people get really nervous about it because it's a sacred term and it means something. If we talk about the last 30 hours, and you can, the common phrase is you can do basket weaving courses for the last 30 hours. People get up in arms, and the reality is they don't understand exactly what these terms are. So part of what I'd like to do today is clarify this so that we all have a common platform to have these discussions. Because that's really where we are.
So I would love to do that. Let's do that. So let's put this in the context of the debate that's been happening about 120 versus 150. The number one argument that I hear against any change to the current regime is that if we move away from 150 as it's currently implemented in the states, we will lose reciprocity, meaning that CPAs may not or will not be able to practice across state lines without having to go through onerous relicensing in every state they practice in or multiple states. Currently, you get licensed in one state and you're good to practice in pretty much all the others, right? So that's the threat, I suppose, that and that seems to be the number one argument against changing any of the education requirements. Is that correct? Would you agree with that, David Knoble?
I would not agree entirely with that, but I'd also rephrase the question. So I believe the question isn't 120 or 150. All right. Now, before I tell you what I think the question is, let's talk about how we deal with education in terms of licensure. So, Blake, do you like pizza?
Oh, I love pizza. You
love pizza.
I mean, who doesn't?
David, how about you?
I'm on board. I'm on board.
I'm bored. All right. Well, we used to have, growing up with my kids, we'd have Friday night was pizza and movie night. So we'd order a pizza, we'd sit down on the couch, we'd watch movies together. And literally to this day, we got Friday family night with my kids. And even though they're graduated and off in their own worlds and have spouses. So pizza is a great way to talk about education when you're a CPA. So you got your crust. Your crust is your foundation, and the crust is a bachelor's degree. So to sit for the CPA exam, we all have to have a bachelor's degree. That's 120 hours of education. The red sauce, the sauce, well, that's the accounting courses that we're required to take. Most places, most states and jurisdictions have 24 hours of specific types of courses, audit and tax, that you have to take to be that well-rounded CPA. And then you put the cheese on top, and the cheese are your business courses that you got to take. You got to take marketing, some operations, again, to be a well-rounded business professional. Now you got a cheese pizza. Well, this cheese pizza allows you to sit for the CPA exam. What happens after that? Well, we're only at 120 hours, and we have to go to 150. So we got 30 hours left to go. We're going to call that the toppings. And one of the toppings is going to be 30 hours on a transcript. It's going to be a master's degree. And that's one way we can turn that pizza into we can put mushrooms on it. Now we got a mushroom pizza. So the question is, can we put other toppings on this pizza to deal with this last 30 hours? All right. So my question is not, is it 120 versus 150? My question is, how do we deal with the last 30 hours? It's 120 plus 30 all the time. But what's the 30? So Blake, one of the things that we did to get to that was we took a really hard look at the UAA, and I'm not talking about just the language in the model rule or suggested rule, and not Appendix B, which we hear frequently when we talk about substantial equivalency, but we looked at the introduction, we looked at the preface, we read it cover to cover. We also did something else. Blake, we took a look at the state requirements around the country, because at the end of the day, we've got NASBA with a really great suggestion for us to start with. And they made it clear that we could take the entire example UAA as a replacement statute, or we could take pieces of it and work it piecemeal as it fits. But each state at the end of the day has their own choice as to how they're going to take care of licensing, right? So the UAA was really, really picky as they talked about what they wanted to do. And they said, flexibility is the key. They said, at all costs, we have to maintain mobility. Now, you used the term reciprocity a minute ago, and I'm going to start with mobility and then work into reciprocity. But we have to maintain mobility at all costs. And we cannot let minor differences discourage us from being able to work across state lines, okay? This is what the UAA tells us. So the first thing I'll ask you is, if we're dealing with the last 30 hours, and right now, this is one of our myths. I believe this is a myth. 30 hours on a transcript. That's exactly what the UAA says. If we're going to be flexible in dealing with this last 30 hours, we have one of two things we can do. We can either lower the number of hours, so it's less than 30 hours on a transcript, or we can change the transcript requirement. Now, South Carolina made a governing requirement when we started this process. We will not do anything that degrades the CPA profession. That was very, very clear. We also don't want to disrupt our substantial equivalency, which we'll get into later in this talk for sure. And we want to make sure that we are doing what's best for the state of South Carolina, taking into account national issues. So if I don't want to degrade the profession, I don't want to lower the 30-hour requirement, but I want to talk about the transcript requirement.
Before you jump into the details of the transcript in 30 hours, can you kind of step back an example of like how this is modular? And I think reading your analysis, Doc, like I think one of the guidelines is everybody has to have integrity. I think something like that. But some states are like, hey, we can't require somebody to have integrity. Or can you maybe rephrase it outside of the 30 hours in an easy example before you jump into the...
Yeah, so if I understand your question, David, you're talking about the section where the UAA talks about four pieces that are four criteria that each CPA has to have. And those were good character, the completion of a 150-hour education requirement. You notice it's not, and I'm quoting this, it doesn't say semester requirement, it says 150-hour education requirement. passage of this uniform CPA exam, and compliance with a 1-year general experience requirement. Those 4 things. Good character is, in many states, the legislators have said you can't define good character and tell people they can't have a license because they got a speeding ticket or something else. So I'm going to strike good character from it, because I think when we get through the process and become a CPA and all the ethics that we have to take, you're really hoping you got good character. We know they all don't, but that's a piece that's better designed outside of licensure. So we've got our 3 E's: experience, education, and exam.
So you're saying that the UAA, the Uniform Accountancy Act, which most of the states have adopted to some extent, does not explicitly define the 150 hours as 150 hours of classes on a transcript.
So the UAA as a model rule, and remember this is a suggested rule because NASBA can't set state statutes. Each state has to do it. As a model rule, the UAA requires 150 hours on a transcript. When you look at the underlying premises that they use to get there, that's one example. Their underlying premise throughout the preface, the introduction, and Appendix B indicates that they've got to be flexible. Well, if you only have one example, that can't be flexible. One example is one example. One example is 100 hours on 150 hours on a transcript. And so my point is, there's only 2 things you can change when you're talking about hours of education in a transcript to be flexible. Okay? Before we get into that, let's talk about some things that are a little easier to understand. Let's put a pin in that and come back to it. And what I might suggest is let's talk about experience, right? We have to have a year's worth of experience. Am I right? Typically, if you have a master's degree, it used to be 2 years. But
right.
Go ahead.
But not every state is the same. There are small differences.
Well, that's myth number 2, right? So everybody believes a year experience, how you work for a year and you can get your license, right? Well, that's not as easy as you think.
Right, because some states require that you work under a CPA and that a CPA sign off on your hours, but other states do not.
Some states have a choice. Mm-hmm. So yes, some states have a choice. Hawaii, let's just talk about hours. Let's talk about math. Right. CPAs like math, right? Math is easy. Okay. So Hawaii says that you have to have 1,500 hours of experience, right? Now, if you just took 35 hours a week, that's 43 weeks of experience. They don't tell you how long it takes to get it. They just say you have to have 1,500 hours. That's 1 year, right? Well, North Carolina says that you have to have 30 hours a week for 52 weeks. That's 1,560 hours. But it means that if you got a week where you get less than 30 hours, technically it doesn't count. So they set a requirement that's per week. And the total, if you get it all, is 1,560 hours, right? Arkansas says I need 2,000 hours of work, of experience to become publicly licensed. North Carolina's rule, though, also says that 1 year experience is under the direct supervision of a CPA. They have another way to get experience. And if you get 4 years of experience without any CPA overseeing your work, that's equivalent to a year. So not only do they have a different number of hours, but you can actually get the experience without working for a CPA and still say North Carolina said it's functionally equivalent to have 4 years of experience without a CPA or 1 year of experience with a CPA.
Okay, and let me toss another one at you. I was licensed in California, where you have the option of doing audit hours or not. I chose, because I don't ever plan on signing audits, to pass on that. So I'm a CPA in California who never worked in audit. Other states, I understand, do require the audit hours. Actually, most or all of them. Is that right?
Some states do. South Carolina does not.
Okay.
But the way I understand it, too, in California, that means you cannot sign an audit opinion. You can't do the audit work until you've had that audit experience, right?
I can at any time go get the 500 hours. Don't quote me on that. I think it's 500. And then I could sign audits. But I can't now. But it's funny because I'm now licensed in Arizona. So I moved my license over to Arizona and gave up my California license. Can I now sign audits because I'm an Arizona CPA, even though I never did the audit hours?
If you live in Arizona and you do an audit that's not in California, I would not advise you to do one in California mobily. But if you did one in Arizona and you follow Arizona state laws and they allow you to sign an audit opinion, absolutely. Now, clearly, we also all know that we're supposed to be competent in what we do.
Right.
And whether or not you've had the experience doesn't necessarily make you incompetent, but you've got to study it, you've got to learn it, right?
Right.
I had to learn more tax. I grew up in the audit world.
The principle is I shouldn't, as a CPA in general, you shouldn't do any work that you are not qualified to do, right?
Right. But we're a learned profession.
Right.
So we can learn how to do it. And we learn how to do it all the time.
So then there's another difference that I've become aware of, which is CPAs or chartered accountants who are licensed abroad, who then become CPAs here in the United States. They have different work experience requirements and education requirements, but let's just stick with the work experience requirements. They can get licensed here even though they didn't do the same exact requirements that, say, South Carolina may have or California may have through reciprocity.
Correct. So you're talking internationally. So
yes,
Ireland is a good example. Ireland, actually, you can come to the United States. You'll have 120-hour, basically an undergraduate degree. Now, they don't transfer exactly. It's kind of like euros and dollars, not quite exact. But they have less than 150 hours of education. And we have a law that basically states, a federal law that says they can be equivalent to a certified public accountant if they move here. And that's okay. That's okay.
Okay. Well, we'll set aside all judgment here. We're just analyzing these interesting differences. So to summarize, there are differences among many jurisdictions, and yet we still have mobility. There's differences in the experience requirement. That's what we've been talking about, and also the education requirement among the states.
The education is the easiest one to understand. So now we've just learned that 1 year is not a year, right? 1 year means many different things. And you need to, if anything, it'll tell you that wherever you go, even if you move to another state, you better learn the state laws because they're different. So that's lesson number one. Don't ever assume that it's the same thing where you came from. So each place is different, but that will help us now have a discussion about mobility. So mobility has dual impact. It's a dual role. All right. And mobility is another, I'm not sure that it's a myth, but it's a difficult concept to understand. All right. Mobility, there's in and out mobility. And I'm only in control of one. I cannot control which state will take my license as mobility. I cannot choose which state I can do work in from South Carolina and know what those, I can know what the rules are, but I have no control over the rules. So for example, Hawaii is the only one of the 55 jurisdictions that has no mobility. I cannot do a tax return or an audit in the state of Hawaii while I'm residing in the state of South Carolina. And I have no control over that. Hawaii is the only one that has control over their laws. That's outbound mobility. But as South Carolina, we have absolute control over inbound mobility. So Blake, I can determine whether a CPA from Arizona or California has the right to work inside South Carolina mobily or through mobility. And for those that are still not sure they understand the mobility concept, what it says is if you're going to work inside a state, but you don't reside inside that state, then if certain things are in alignment, you're going to agree to be bound by the laws in the state you're working in. So if you're in Arizona and working in South Carolina mobily, you're agreeing to abide by South Carolina laws. And if you don't, South Carolina Board of Accountancy is going to request to see you and then take it back to your Arizona board. You agree to that, then you can work inside the state. Now, there's a problem with the way some mobility works today, and there's a problem the way South Carolina mobility is written today. When I say problem, it's a protection of the public issue. So one of our other guiding principles was we want to make sure we maintain protection of the public. That's an important duty. It's part of why CPAs are trusted. And I don't know for a fact. So this is a personal opinion of David Knoble. It's not necessarily the state of South Carolina. But I believe that the UAA was written, the mobility requirements were written with the thought that no state would ever decide not to be substantially equivalent. Okay, so why do I say that? Well, now let me speak of South Carolina again. In most mobility laws and in the UAA, the first test is whether you come from a substantially equivalent state. So whether or not you are substantially equivalent, Blake, as long as your state is, then you're presumed to be substantially equivalent in South Carolina. That's UAA.
Okay, let me make sure I understand this. This seems important. So the state of Arizona, if their requirements for CPA licensure are considered to be substantially equivalent to South Carolina's, from the point of view of South Carolina, then I will have mobility in South Carolina. Did I say that right?
Close. So the state, it depends on how mobility or how substantial equivalency rather is defined in the state. So again, I want to come back to that because I've got some specific examples for you and how it's different.
Okay.
All right. So
but like you said, it's all the state. It's the state in which you're practicing, and I suppose that would mean where the client is.
It's the state where you are practicing.
Yeah.
And the client's going to be in a different state.
Okay.
That's your mobility.
As an Arizona CPA, when am I subject to South Carolina rules? It's when I'm practicing in South Carolina.
If you do my tax return and I live in South Carolina, and you're doing a virtual CPA firm, you're practicing in South Carolina because you're doing my tax return. I don't live in Arizona, right?
Okay.
We are, and note that we're the only profession that can do this. You don't have to register with South Carolina. You don't have to pay a fee to South Carolina. You don't have to get licensed in South Carolina. And lawyers have to pass the bar in every state they work in. I think nurses, if I'm right, nurses are the only ones that really adapted to this, and they did it with the pandemic because nurses had to move between state boundaries to assist hospitals. And so the nursing profession decided that they'd practice a type of mobility, right? Mm-hmm. So let's come back to this concept. The UAA says, first test, if your state is substantially equivalent, then you can work with mobility. If your state is not substantially equivalent, if you are, then you get to work with mobility. What happens, and I'm not picking on Minnesota, but let's assume that Minnesota decides that they wanted to put in a requirement of only 120 hours and 2 years of experience. And then let's say that South Carolina or another state decided they were not substantially equivalent. So Blake, let's assume that you're that Minnesota CPA. So you're not substantially equivalent either. So how does that work? You're still going to do my tax return in South Carolina. And if you look at South Carolina's law, which mirrors the UAA for the most part in terms of mobility, you're going to say, well, Blake doesn't come from a substantially equivalent state, and Blake is not substantially equivalent. So he's not practicing with mobility. He's actually practicing the unlicensed practice of accounting, which is as if you weren't a CPA in South Carolina, even though you are in Minnesota, right?
Okay. So
the law in South Carolina says, that's okay. We'll issue you a letter. We're going to say, Blake, you can't do that anymore. And Blake's going to say, if I want to do the return, I sure will. That letter's not going to stop me, right? So then we have to turn you over to administrative law court. They have to decide that they're going to get the notice from us. They're going to read it. They're going to determine if they have jurisdiction over you. Then they're going to decide if they have to hear the case or they're going to hear the case. Then they have to find you guilty of something. Then we worry about it. Well, by this time, you're done. And you may not ever work in here again. So what's it really going to happen?
Right.
So the fallacy of the existing mobility process is that we didn't anticipate a state might not be substantially equivalent. So what's the fix? Well, it's pretty simple. And this is the fix we've used. If you remove substantial equivalency from the mobility requirement and you say, look, if you're a CPA, then you agree to be bound by these laws and you can practice here mobily, right? Now, it doesn't matter whether you come from a substantially equivalent state or not.
So that's what nurses did.
I'm guessing a little bit here, but conceptually, I think it is what they did. But here's what's more important. This is not a radical idea. This is not new. It's clearly the right concept. But Alabama has an existing law that says exactly that, okay? Alabama already tells us that they don't mind that you don't have to be a CPA to work in that state. They say a person who's licensed as a certified public accountant in another state, blah, 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 can practice. You just have to be a certified public accountant in another state. Guess what? North Carolina has another one. The requirement is that the individual holds a valid and unrevoked certificate or license. There's no mention of substantial equivalency in either of those state laws.
How many
Now
states do not have this substantial equivalency requirement?
Gosh, I'd love to tell you. I have not had time to read all 55 jurisdictional laws. I wish somebody would put together a good database of that. So I had to do this manually one by one, but I know those two don't. And I know Alaska has another twist to it, right? So Alaska doesn't even go with this concept, this definition. They say, if you have 150 hours a year experience in the CPA exam, then you can practice here mobily. Oh, and by the way, our definition of substantial equivalency is that the Board of Alaska CPAs determines it. It has no mention of NQAS or NASBA or any other certifying organization. Alaska decides on their own volition if you are substantially equivalent. So that was your earlier question.
Right.
Some states rely on the board or NASBA, and either one could determine they're substantially equivalent. Some states only rely on their own volition and whether you're substantially equivalent. So
in all cases, it's going to be either the board in that state or NASBA, or the state simply doesn't even rely on substantial equivalency to determine mobility.
Or the combination.
Okay.
You could be substantially equivalent according to NQAS, and then the board could override it and say, if you're not, we'll say you are, right?
NQAS is NASBA.
Correct. That's their service that determines if a state or if an individual is substantially equivalent. And important to note, right now, every jurisdiction is substantially equivalent, right? So there's a lot of terms here. We're starting to get confused, right?
So according to NQAS, well, and I'm glad we're talking about this because I feel like the issue is vastly oversimplified when it's discussed. Like this whole concept of substantial equivalency, there's a lot of room to change what that means. And NQAS, it seems, has a lot of discretion. I mean, when it decides what substantial equivalency is, it can basically rewrite the law in a sense by simply making a determination.
And now remember, I told you that we have no control over outbound mobility. I can't control what all the other 54 jurisdictions do. I can only control what happens coming into South Carolina. So yes, there's possibility, but there's always been the possibility for a state to just say, I don't like South Carolina, you cannot come practice here.
Right.
Mobily. Hawaii said that to everybody. You just can't come in. You gotta move here and you gotta get your own license.
So can I rewind just kind of what we've what this discussion has been for the last half hour? There's the UAAA. And if let's say we add a 51st state, we're going to give them the UAAA.
I think you had an extra A on there.
I too many A's? UAA. Did I say what?
Uniform Accountancy Act.
Maybe I kept saying A's. So we add our 51st state. We're going to give them that. Like, hey, you need to create a state society. You need to create some laws. Use this as a guide. And they could take it very literal, or they could do whatever they want. And you're arguing like it's kind of vague. In over 8 editions of this, all 55 jurisdictions have just kind of made their own rules along the way. And your bigger argument is because of that, we, South Carolina, can interpret the 30 hours any way we want. Is that kind of the stack of this argument?
So first, I don't think it's vague. I'm taking the UAA at its word, especially when it comes to the introductory material, because it is in its 8th edition. So I believe that the words and the terms and the concepts are very important and are there for a reason. The UAA model rules and statutes, however, is one example, and they are very, very specific. So your example that a state could use it is yes. And the answer is South Carolina can do whatever we want. And what I'm trying to tell you is we're not being radical in our law. What we're actually doing is studying what the intention of the UAA is and looking at existing state laws. So if you rewind again, right, if you rewind backwards, we're all substantially equivalent today. So doesn't it make sense to you that if we study other states' laws, then if we find a law that makes sense to use in our state, if we use that law, we should still be substantially equivalent. And remember, substantial equivalency only has to do with your initial licensure process. Regardless of what I say for mobility, regardless of what South Carolina does for reciprocity, it's really how you get licensed. So once I get this new license, am I now equivalent in the eyes of other jurisdictions? That's the concept of substantial equivalency. So sort of this other myth busting process, right, is that we're going to break mobility. In reality, I have no control over the mobility in the other states. So if another state says you have to be substantially equivalent and there's no room for error, otherwise you're not mobile, then how do I break it? Well, I have to break it by doing something that is not considered a minor difference, that is not considered flexibility from the UAA. The UAA does not say you must follow this rule exactly to be substantially equivalent. It says the opposite, the exact opposite. The ultimate goal is flexibility. The key is flexibility. The key is allowing minor differences so we don't interrupt state law. So I'm going to go back now.
But somehow we have ended up with a situation where any change is considered to be breaking mobility. So how do you square that with the intent of the UAA?
It's really interesting. Either the rule is we must follow this law exactly, or it's flexible. Those are only two choices. And since it said flexible, we either change the number of hours, this 30 hours, the toppings on our pizza, or we change the idea that's on a transcript. So why don't we take a look at ways that education is used around the country, right? Well, and remember, all of this is from the process or the viewpoint of pipeline. We want incremental CPAs that would otherwise not be CPAs. And we want to do it in such a way that we uphold the integrity and the long-standing tradition of the fact that a CPA is considered a very important business advisor. So we don't want to degrade the CPA profession. Did you know that New York has a law in place that says if you have 15 years of experience in public practice, you do not need an education to get a CPA license. You need to pass the exam, but that takes the place of education.
Hold up. This is blowing my mind here. So you're saying in New York, if I never got a college degree, but I've practiced accountancy for 15 years, I can take the CPA exam and I can become a CPA.
I wasn't clear whether you still needed a year's experience or that was baked in, but yes. Yes.
Well, now, I assume if I have 15 years of experience, right, I'm good there.
So maybe you need 16. So I don't want to split the hair.
And then a CPA, so in that rule doesn't cause New York to somehow be not substantially equivalent.
That's correct. Now, I know that if I'm trying to think through this, the one question I'd ask is, well, how many people have ever used it? Right? Well, I don't know. Nobody really knows except potentially New York, because we don't submit to NASBA or anyone else how we got licensed. We simply ask the state to license us when we get there. So number one, we don't know how many people have used it. But what we do know is that New York, who is the state that actually created the CPA, CPAs were created in the late 1800s, if I'm right, through the state of New York. First state society, New York.
Right.
They haven't removed the law from their books. What does that tell you? That tells you that somebody believes it's worth leaving, no matter how often it's used. So I come back to its pipeline.
Right.
Now,
so I'm sorry. I just have to. So how then could any state or NASBA justify? How could NASBA or any state deem Minnesota, for example, to be no longer substantially equivalent if they create an alternative pathway that has 120 semester hours and 2 years of experience, when in New York State, it's possible to become a licensed CPA without a college degree?
Yeah, it feels like there's already existing alternative pathways. They already exist.
That's part of my argument. Okay, now I think this is an extreme, and it clearly doesn't help our current pipeline issue, because if someone starts today, it's 15 years before they're here. By that time, we're going to be in a different cycle again. So I'm not suggesting that's a fix to pipeline, but it's one alternative that exists today. And I purposely didn't start with Ohio because Ohio's alternative path and passing the GMAT with a high score and counting for some education requirements. I think folks have talked about that a lot. So I've not studied it because I wanted to find new things. I wanted to find other things that were out there.
But you're saying in Ohio, because I've heard that before, that Ohio has a pathway that doesn't require 5 years of education, and they are also deemed substantially equivalent by NQAS and by all the other states.
And what it tells me is that there's alternative ways to do things. We've seen experience in alternative ways. Now, again, I think 15 years is certainly reasonable. I think it makes sense. I'm not interested in discussing that in the state of South Carolina because I don't think it helps us economically. It doesn't help us bring in young CPAs. It helps us bring in 35-year-old and 40-year-old CPAs. And we want folks that are a little bit younger. But what it does tell me is that there's flexibility. So if I accept the fact that transcript is an item that can change, if I accept the fact that at least one state has replaced experience and education, and we know that there are different ways to get the experience, and what we're saying is there are ways to deal with state laws that bridge the gap for this last 30 hours but aren't on a transcript. So I'm going to ask you a comparison question. Let's see if you I'm going to go out on a limb and say, let's see if you get this question right. Okay. So David, you're in the middle here. So you're going to take an advanced business writing course at the University of South Carolina in Columbia. And it's going to be on your transcript for this last 30 hours. It's not a required course, but it certainly will help you with your business writing. Now, Blake, you're going to take the same course, but you're going to take it through the executive program, which means you're not going to get credit for it on a transcript. But you and David are actually in the same class. All right. So here's the question. Is there any difference in the education that you received between the two of you?
As long as we attended the same lectures, we did the same homework, we took the same exams, no. The only difference is that transcript.
That's my point. So why would we not take our universities across the country, let them use their executive programs and come up with lower cost education processes that are the same types of classes? And you know what else you do when you create this process? I might call it a certificate program instead of a degree, right? I've turned these toppings of this other 30 hours where we've just decided and we've determined that you can take any class you want. You take photography, you take psychology, you take whatever you want. It doesn't have to be business related. What if I give you the option to take some business courses that aren't on a transcript, but provided by the same professors at the same universities, and we say that's equivalent to 30 hours? I have to believe, based on these analysis, that that's a very minor difference as to whether it's on a transcript or not, especially when it's a really important class to make you be a better and more well-rounded professional.
Did you say earlier that the UAA doesn't define the 30 hours as semester hours?
So Appendix B explicitly removes the term semester. Okay. Appendix B does not use, it says 150-hour education requirement. And it says flexibility is the key, right?
Right.
And I'm sure that, again, I have to rely on the 8th edition, being that people have looked at this stuff 8 times and decided that the way we've written it is clear, it's concise, and it means what we want it to mean. Now, the preface, and the introduction talk about these things. The introductory comments give us 9 principles that the AICPA and NASBA agreed to when they created the UAA, and those have now withstood 8 editions with their modifications. The 9th principle in the introductory comments is enhancing the mobility of CPAs. And what it says is, 9th and finally, I'm quoting, it's essential that mobility for individual CPAs and CPA firms be enhanced with respect to the goal of portability of the CPA title and mobility of CPAs across state lines. The cornerstone of this approach recommended by this act is a standard of substantial equivalency. Under that, the ability to obtain reciprocity is simplified. They have privileges. So it says we're going to create all this, right? The second paragraph says, substantial equivalency is a determination by a board of accountancy or NASBA. We've just said that those two groups determine what it is. That education, examination, experience contained in the statutes are comparable to or exceed the education, exam, and experience requirements contained in the Uniform Accountancy Act. Substantially equivalent. That is, if you look up the word substantially equivalent and you say what else means substantially equivalent, it means closely similar. functionally equivalent, almost the same, right? Largely equivalent, approximate match, functionally interchangeable. All of those things tell you that it can't be exactly the same, but it's got to be similar. So I come back to 30 hours on a transcript. There's only two things that we can change, hours or transcript. And I don't want to change the hours. So I don't want to have the 120, 150 discussion. I want to have the 30-hour discussion, remove the transcript, and what else can we do that's equivalent to that 30 hours?
Well, some may argue that experience is the best education. Is a year of experience substantially equivalent to 30 hours of education on a transcript? I would say yes.
New York has at least defined it in part. 15 years equals 150 hours, right?
Mm-hmm.
So 1 year is that 10 hours? Did I do that math right? A year of experience is worth 10 hours. So 3 years is worth 30. If you just take that metric, right?
There's already
that's an old metric.
Right. There's already a conversion rate there.
And it could be a combination. It's not one or the other, but it's not 30 on a transcript is really what the point of view is in the argument is.
Now, look, all of this, so there's some very, very key components here. And I know for a fact that some of the folks that are going to be watching this are going to be in states outside of South Carolina. And I certainly hope they are, because just like Minnesota, we want to spark discussion, but we want to do it in a framework that makes sense.
Mm-hmm.
Part of what we need to do today, part of our responsibility is to future-proof our profession. We need to make sure that the laws that we have will adapt with changing circumstances. How many of you today would have thought that most new graduates would only spend a day or two in the office every week? I put on my suit and tie, carry my briefcase every day to the office. Yeah, I went uphill in the snow both ways too, but the point is that today we've already adapted with the pandemic and we don't spend near the same time in the office. What else are we going to do when we adapt? How are we going to future-proof it? Well, we've added this additional path to licensure dealing with IT, right? So now the whole exam has changed, okay? So we want to make sure that we future-proof our law. That's the main reason that we think that Arkansas or that Alabama and North Carolina made the great first step removing substantial equivalency out of mobility. So let's future-proof it by making sure if the state goes a little rogue, even if it's for a short period of time, it's fine. We want to make sure that we protect the public by governing them.
Mm-hmm.
But number two, what we want to do is we want to make sure that we remain substantially equivalent, because it's going to take time. We've spent the last 20 years putting this in place. And, I really have a high respect for Ken Bishop as the CEO of NASBA and for Sue Coffey, CEO of Public Accounting at CPA. They're in a tough spot because they're trying to make 55 jurisdictions happy that all differ. They're trying to find something that works for everybody. And in reality, we're trying to find something that works for South Carolina and fits the framework such that we work well with other states. Another state doesn't say, we don't want to do business with South Carolina. So all these suggestions, all these toppings on the pizza, for those of you that are watching in other states, I think here's the way to do it. I think we build into the law something that we put in our last law change, and I'll remind you we're substantially equivalent today. And that is, once we list our main requirements, our 150 hours on a transcript, a year of experience and exam, we give the board the opportunity to determine that certain things are equivalent to that 30 hours of education. The Board of Accountancy can then determine what it is. Because SCACPA, we're an association that promotes and protects CPAs. The Board of Accountancy regulates CPAs. So sometimes we may be a little bit of a crossroads. So let the board make that decision. Our law already has it in place. And that the law changes that we're suggesting just further define it and give the board a little more direction and say they may create rules and regulations that deal with other programs that are substantially equivalent to the education piece, including items such as certificate programs, right? So we're giving them opportunities to make decisions, but they've got to make the decision.
So really you're future-proofing it, because there's some elbow room in there, because we don't know the way technology is 3 years from now, 5 years from now. College might be delivered in a whole different way. Like the whole concept of college might not even exist. We have no idea. And you're going to give...
The whole concept of semester hours just seems very outdated in many ways. Like it's a time-based way of measuring education, as if the number of hours that you sit in a lecture hall determines what you've learned. And I mean, there's already ways to earn credit for college that bypasses sitting in a lecture hall. You can take these exams at many schools that give you college credit simply for passing the exam. I forget what exactly they're called. But
so you're talking about AP tests.
There's AP tests, and there's another one too, where you can test out a certain like freshman year courses.
Oh, yeah.
And I forget who runs it, but it's actually a great
I'm
way
a dinosaur, so I had some of those, right?
Somebody turned me on to it.
Let me digress.
Yeah, go ahead.
Just a little bit. South Carolina is also doing something else new that sort of fits that realm, and we've started a pilot program this year. Right now, it's beginning in the fall, that will have a dual enrollment process for high school kids. These students will be able to take a college level accounting course, intro to accounting, not audit or something fancy, by streaming with an online university professor. So just like some of these students do engineering today or computer science, they'll do it with the tech schools during the school day and get credit for it. We have actually funded through our association. We've spent money to work with one university and one local group of high schools to allow students to take the course, which will then give them college credit for accounting. You still have to pass it. But the point is, we're trying to not only introduce accounting at the high school level, but let those folks get college credit for it as soon as they enroll in South Carolina. And so you talk about pipeline and talk about getting people interested in our profession. Clearly, it's best to do it at that level. And so why not make it open and available for them to get college credit? There's a lot of talk about STEM and can we make accounting STEM? There's federal law out there now that they're discussing, and we told our federal folks we support it. We've got a law in South Carolina to promote STEM. So honestly, it's not just dealing with our laws and our regulations today and how you become an accountant, but each state, I believe, has a duty to start working with the younger folks and trying to pull them into the profession, let them experience it, but do it in such a way that they get credit for it as they move into the college profession and the college venue, which is what a lot of other professions do today.
So if South Carolina or Minnesota or any other state for that matter changes its requirements to alter the education requirement in some way, because these states are already deemed substantially equivalent, nothing will happen automatically to eliminate mobility. It would require another state or NASBA's National Qualification Appraisal Service to then say, after the legislation passes, South Carolina, Minnesota, whatever state, you are no longer substantially equivalent. It would take action by them to cause a problem with mobility for your CPAs. Is that right?
It would depend on the state law. So we've already said Alaska doesn't use NASBA's substantial equivalency. They set their own.
Right.
So
but currently,
Alaska
you
may
are
or may
substantially
not
equivalent already right now.
Right.
So there's nothing automatic
Correct.
would happen. It's not like in Alaska they have, it written into the law, right? They also have discretion because there are all these small
Correct.
changes. So their board would have to do something.
Because if the keynote is flexibility, everything's
Right.
about flexibility and promoting mobility across state lines. So yes, but the bigger point, Blake, you've got it. I think I'm going to say you have a little bit backwards. It doesn't require a law change here in South Carolina. Every jurisdiction is free to make that decision right now today, but without a law change.
Exactly.
5 years ago, they could have made that change. It has nothing to do with the current realm of where we are. It has everything to do with what a state wants to do.
So what I'm getting at is, if all the states, if all the leaders from all the boards of accountancy and all the state societies got together and said, hey guys and gals, let's give each other a little bit of wiggle room on this, and said, we're not gonna deem any of you all to be no longer substantially equivalent. We don't have to worry about reciprocity, or not reciprocity, mobility, right? Mobility is only under threat if the leaders of these boards of accountancy or at NASBA decide to put it under threat.
Depending on state laws, NASBA clearly has the authority to use the NQAS service to determine that a state is not substantially equivalent.
So it's not automatic.
I honestly
though.
believe, I think Ken's a reasonable person. I think NASBA is a reasonable group, and I believe if we all work together, that we're going to find a way to do this without getting to that point. I know it's very important to Ken because he's told me personally that he wants to make sure that we all maintain that mobility and that reciprocity. And, we didn't hit reciprocity, but in general, reciprocity follows very similar rules. If you come from a substantially equivalent state, it may be okay that you get your license here, right? Some states have specific requirements, but most states have what we call the 410 rule as the backstop.
Mm-hmm.
And that 410 rule means that if you've been a CPA for 4 years in the last 10, actively licensed, you can get a reciprocal license no matter whether you were substantially equivalent, no matter what you got. If you had 120, whatever it is,
so
right?
It's really funny that we're having this big
problem
debate.
at the worst case for a select group of people.
We're having this big debate about initial licensure when you can just backdoor your way into almost any state by being a CPA for 4 years.
Yeah, it feels like all the wiggle room already exists, but they're really making it's being presented as in like, oh, this is the domino that's going to cause everything to collapse. And it's like it could collapse anyways because all the wiggle room's already there.
That's right. It's actually, I may be going out on a limb, but I think mobility to a degree is already broken. There's so many different laws. You don't have to register. You don't have to license to practice mobily. How does another state even know if I'm working mobily?
Yeah,
that's a dangerous concept to think of. But in reality, what we're
irrelevant.
Is, it's irrelevant until someone does something they shouldn't, right? That's when you get noticed. If you do,
but even then,
bad to your clients, and
if I'm doing a tax return for a client in South Carolina, what jurisdiction does the state of California or state of South Carolina have over me in Arizona anyway?
So if you're practicing using mobility and it works, right?
Yeah.
If let's say you never give me my documents back, you don't finish my return, you said you filed it and you didn't file it, and I got a complaint. I'm going to take it to South Carolina and they're going to sanction you, and then they're going to tell your board what happened. And your board will come after you. That's the way it's supposed to work, right?
Yeah.
So in reality, there is a hook. But
it's not like they're going to send state troopers.
Your attorney's going to look at the law
to
make sure it fits. And we want to make sure we future-proof it so that it does fit regardless of who you are as a CPA. That's right. That's right. So I can't speak for the other states. I can just tell you from South Carolina's perspective, we think for us, certainly the best way to deal with this is deal with the 150, 120 plus 30, and take the 30 and let the board decide what other things are functionally the same as that 30 hours. And let's see if we can improve on the process, but cut the cost and get some of these folks in that can't afford to spend 5 years in school.
Well,
but are just as good as we are.
David Knoble, I just got to say, I love what you have done here because this is like a work of art. You have managed to find the flexibility that's already in the existing law, that's already in the UAA. And I'm looking at it right now. I found that Appendix B that you mentioned, Section A, substantially equivalent states. And it just says 150 hours. It doesn't say semester hours. So, yeah, I think...
And it says flexibility, right?
Yeah. Oh, yeah, and that's at the very front. Yeah,
right,
flexibility is like in all of the principles there. So I think it's a very, it seems like a very strong legal basis to make these changes. And I wonder, it would be, I would have a hard time arguing the other side of this, Well,
I was hoping you would, and that's why I put it together.
Yeah.
And once we decided that it made sense, it was easy to adjust the law.
Yeah.
I really think we fit in it, and we've done nothing new, nothing out of place. And what I think we're proving is we can all do this, and we can do it in such a way that it works. And so again, kudos to Minnesota for sparking the conversation. I've talked with their board chair and their CEO. They're great folks, and they're trying to make sure that we all do the right thing. They sparked us. Ken Bishop and Sue Coffey are working really hard at the national level, and they've got a task force to try and come up with some things. So you never know. Our law might change a little bit before it goes in place. Keep in mind that laws take time. We have a 2-year cycle. Somebody else starts something today. It might take them 3 years to put things in place. We're going to have to deal with some law changes, but that's nothing new either. It's an exciting time to be a CPA for sure. It's an exciting time if we can can put options in front of people to get them into the program that couldn't otherwise get here, and really add to the profession, because the workload's only going to increase. And at some point, either people aren't going to get served or not going to get served with high quality, and that's unacceptable as a professional.
We can't let that happen as a profession. If we
I
let
agree.
the talent shortage impact the protection of capital markets and investors and taxpayers, like that would be far worse than any of the potential mobility issues. Like, we should put the public above our own interest in this regard.
That's what our Board of Accountancy does. That's why they're the right ones to make the decisions.
All right. Well, David
Thanks
Knoble,
for everything you guys do to getting the word out and telling people what's going on. This is a great show. If you haven't listened to it, you got to listen to these podcasts. It's great stuff.
Thank you so much for joining us, David Knoble. We will put links to anything you would like to share in regard to this initiative in our show notes. So, dear listeners, or if you're watching on YouTube, do check the description, do check the show notes for the links. And we'll put a link where you can contact David Knoble and learn more about the South Carolina Association of CPAs.